This video is sponsored by PelucidFX.com.
Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay guys, now it's the gold market. The gold market will continue to expect some appearing of some reversal pattern that could lead us to the 1350 area. It's the target of the potential pattern on the high time frame, on the weekly time frame chart. And here we are speaking about the possible double repo buy, suggesting upward directional pattern initially, because the chances of appearing of this pattern still exist, and we will discuss this pattern right now. Besides, currently I do not see any other patterns that could be formed here. Well, we see that market has hit the target. Yesterday we said that market probably will continue more slightly higher. That has happened, and right now market has hit and reached weekly period resistance one. In fact, market right now stands at some edge, because if it will hit the significant resistance at the 1321 area, this first fib resistance, it will reach it. In this case, that will not be quite the double repo, or it's better to say it will be not good moment for the double repo pattern, because the pure double repo, the perfect double repo pattern, suggests no hitting of the significant resistance. As I explained yesterday, this mostly has a relation to the bearish positions that now stands with this move down. The traders hold their positions, and when they just show the minor retracement, it means that all bearish positions that have been open with this move down are still here. And if market will fail to continue move lower, the double repo will lead to significant fast acceleration to the upside, since the stops will be triggered of those who hold the bearish position. When the market hits some significant area, it means that some positions have been closed on this retracement, and that is not very good for a double repo pattern. It doesn't mean that it will not work, but that is the not very good sign. Well, if market will form after that deeper, slightly lower second bottom of the double repo, that could partially fix the situation on the count of the breakout traders who will take the short positions at the breakout of these lows. And when the market will return right back up, those traders who have open position on the breakout will be trapped in the wrong position, and they could a bit add and reestablish some bearish positions that have been lost with this retracement of those traders who held them with this downward action. So I have explained these moments very often when in our daily updates. Well guys, I hope that it's not very sophisticated. Anyway, what I would like to say is that right now is very a responsible moment for the market, because if it will turn to the downside right here from that highs, this will keep the chances on the very good double repo pattern. But if it will hit this level, that probably turn this to the bread and butter action, and it's very difficult to treat this action as the pure double repo, maybe only as a double repo lookalike pattern. But we will talk about this separately. If this will happen, that will be an object for our discussion. But right now, since as market has not hit this fib resistance, that's nothing to talk about yet. So right now we will be mostly focused on the intraday charts, because here you can see the picture almost the same as we have discussed yesterday. The major chart right now for us is the hourly. Here what we have. First of all, as we said, market has hit the weekly period resistance 1, and take a look. That is also the 1618 extension of that retracement. Also we have this bearish divergence, as you can see with the MACD, and multiple bearish stop grabbers right at the top that suggest action below these lows. That's just how the stop grabbers work. Well, what it could give us? Take a look that by this action to the upside, market hasn't even washed out these highs, and in fact has stopped slightly lower than these highs stand. Does this situation remind you this one? Recall these lows. We said that probably market has confirmed these lows and we should be ready for the possible upward action. Those moments that we have discussed on the previous week, and that has happened. So here could be the same situation but in the opposite direction. You see that market hasn't passed through these highs and turned to the downside. First pattern that I see this in very short term picture on the 15-minute chart is the double top. That suggests the move equal to the distance, the height of the top. It's approximately right here. That will be the minor target of this double top pattern. In the larger scale, on the hourly time frame chart, market could turn down by this possible head and shoulders pattern. Okay, because the 1:618 ratio is very typical for the head and shoulders, and other signs of weakness right now suggest that this potential head and shoulders pattern in fact has not as small chances as it could be seen on the first glance, especially from the point of view of the in the shadow of the light of the possible double ripple buy pattern that we wish to get on the daily time frame chart. So you can see that current situation is very interesting on the gold market. So what we could do here, first of all, if you're a scalp trader, you could try to trade these stop grabbers with the possible target right here, or even double top with the possible targets at the neckline, maybe slightly higher, somewhere around 1298. Well, this scenario is attractive mostly because you could place very tight stop, right, slightly higher than these highs, and that could give you really dramatical risk-reward ratio. Another possibility that could appear but hasn't appeared yet could come from the head and shoulders pattern itself. But first we need to get this pattern, and currently we do not have it. Maybe market also could form some kind of the wedge pattern here. That's also possible. We do not know. Well, if market will form this head and shoulders, we could get ABCD down. That will give us the continuation with the double ripple on the daily time frame chart. So you can see how all these patterns could be combined with each other and add each other. That is very nice picture. Well, let's see what will happen. That's been said, what I would like to say is that this confirmation of this top could suggest that market is ready to show short-term reversal to the downside and finally could turn to the forming of the double ripple pattern and start move down with the deep retracement and with the close below the 3x3. That is what I would like to get on the hourly time frame chart. Meantime, if you trade on the intraday charts, you could be focused as on this pattern, as on the scalp stop grabbers, as maybe on this head and shoulders if it will be formed. It's absolutely no problems with it. So just keep an eye, because gold market right now could give us a lot of different patterns for trading, as on the daily time frame chart or as on the intraday charts.